What's up everyone, you made it. Lab number 4. This lab is going to focus mostly on tax credits, which is a really important topic in tax. I would say tax credits are one of the things that everyone has to deal with and everyone thinks about if they reside in Canada and end up paying taxes in Canada. Even if they never go on to practice tax in any formal way, they just deal with it personally in their own lives. So this is a good topic to ensure you understand. So you've got questions, we've got answers. Let's go. Lab 4, question 1. In each of the following independent cases, determine the maximum amount of 2020 personal tax credits, including transfers from a spouse or dependent, that can be applied against federal tax payable by the taxpayer. That sentence, in all cases the taxpayer's net income for tax purposes is equal to their taxable income, I've highlighted just now, because that's another way to say that there are no Division C deductions in this question. Thus, NITP will be equal to taxable income. Now, a calculation of tax payable is not required, only the applicable credits, and that's important that you understand the scope of the required for you on any question or exam. Let's look at scenario 1. Cami Tarbell has NITP, net income for tax purposes, of $96,500, all of which is employment income. Her employer has withheld maximum EI and CPP contributions. She is married to Bob Tarbell, who has net income for tax purposes of $86,550. They have 4 children ages 3, 5, 7, and 9. All of the children are in good health and none of them have any income during the current year. Now you may have noticed this entire time I've had open on the right side of the screen section 118 subsection 1, personal credits. And that's to remind us where we can find tax credits or where they begin in the Income Tax Act. They are in Part 1, Division E of the Tax Act. Section 118, subsection 1, personal credits, starts off by saying A times B, where A is the appropriate percentage for the year, and B, variable B, is the total of, and then it goes on to talk about a few different paragraphs. All of this was covered in a lot of detail in your lecture, and if you haven't seen it, then I would recommend you pause the video and go and watch the rest of your lecture first. As a quick reminder, you could scroll down here to paragraph A, where it talks about what credit would be available to an individual that is either married or in a common law relationship. You'll see the number here, 10,527 to the power of 13. It's not to the power of 13, that's a reference to a footnote. And that footnote is really saying that that number, 10,527, was indexed after 2011, and you can find the actual numbers in section 117.1, subsection 1. The actual number for the basic personal credit has changed recently, and it's going to be 13,229. So we can go ahead and start populating our answer. The basic personal amount, 13,229. Another place you could find this is if you wanted to go, actually for many of the tax credits, is go to the tax reference tables at the front of the Income Tax Act. Here it is, the federal and provincial tutorial non-refundable tax credit rates and amounts for 2020. And we're looking at the federal column as this is a federal course and it's current to June 30th, 2020. Now here you'll see that the basic personal credit actually shows up as 12,298, but there is a reference to a footnote C. So if you flip the page a couple of times, you'll eventually get to that footnote. Here we are to that footnote C, and it says down here the federal government proposed to gradually increase, etc., and we eventually get to our number, 13,229 in 2020. Now going back to section 118, subsection 1, paragraph A, we've figured out what the current year's number is, right? The 10,527 was the number in 2011, and since it's been indexed to inflation. And there's more to it than that for someone that's married or in a common law partnership relationship. And we come to the formula. The formula here says plus C minus C.1. If you were to read C, C is an additional amount, also indexed to inflation, if the spouse or common law partner has a mental or physical infirmity. We move on to C.1, and C.1 talks about the income of the spouse or common law partner. And in case 1 that we are working on over here on the left side of the screen, the spouse did have income. So we should take that into account. And then we have the spousal credit, which would be the basic personal amount, subtract the spouse's income, and what's left over is the credit. Now, this credit cannot be negative, so if you have a spouse that has more than $13,229 of income, as many spouses do, this credit would just be 0. It wouldn't be negative. Now, if I recall the case correctly, the taxpayer did have income from employment, and they paid the full amount of CPP and EI. So that means we could recognize the EI credit, the CPP credit, and the Canada Employment Credit. Where did I get those amounts? Well, we could go back to the reference table if you'd like. Here we are, we're back looking at the reference tables on the right side of the screen, and I'll just scroll down to show you where some of these amounts are coming from. We can see here the Canada Pension Plan amount of $2,898. Just above that is the Canada Employment Credit of $1,245. And down here is the employment insurance premiums of $856. That's where the numbers came from. Once we have all of our tax credits, we can add them together. And we come up with a total tax credit base. Multiply that by the appropriate percentage, and we end up with our final tax credits, in this case $3,421. Scotty Severa has been divorced for a number of years. Because his former wife is an airline pilot who travels extensively, he has been awarded custody of their 3 children. The children are aged 7, 10, and 15, and they are all in good health. Scotty's net income for tax purposes is $71,400, all of which is spousal support payments. The 2 younger children have no income of their own. The 15-year-old has income from part-time jobs of $8,640. Now, going back to the tax reference table, we know that Scotty is going to get the basic personal amount. And we know from what we read earlier that the current amount is no longer $12,298. Let's go back to note C just to confirm. There's the number $13,229. And remember from your lecture, we have to be careful with, is that going to be the amount for the taxpayer? That amount is the amount for individuals with net income that are less than $150,473 in 2020. If the individual has more than that in income, they would actually have a reduced basic personal credit. Because Scotty has children, he would also be eligible to claim the spousal/partner or wholly dependent credit. In this case, it would be for a wholly dependent individual, one of his children. What he should be doing is he would just claim the credit for any one of these 3 kids, and since the 15-year-old has income, he would not claim the credit for that 15-year-old. It would be claimed for one of the other 2 kids. That way he could maximize the credit. Case 2. Scotty will have the following credits: the basic personal amount and the eligible dependent amount. This would total $26,458. Multiply that by the appropriate percentage, and the total credits in this instance is $3,969. Let's look at case 3. Donald Preble has net income for tax purposes of $126,325. Okay, that's a good number to note, and it's also less than that $150,473 we looked at earlier. So Donald will be eligible for the maximum basic personal credit. It won't be reduced because he isn't making over the threshold amount. So going back to the question, all of that NITP for Donald, all of which is rental income. It's all rental income. His spouse, Donna, has NITP for tax purposes of $6,340. Their daughter, Diane, is 26 years old and has a mental disability. While the disability is not severe enough to qualify for the disability tax credit, she has no income during the current year and continues to live with Donald and Donna. So looking at this, I think we can say that Donald is going to get the basic personal credit and will also get a spousal credit reduced by his spouse's NITP of 6,340. What we really need to think about is there an additional credit for their daughter who has no income but does have a mental disability. Since I've got the tax reference tables open on the right, we can look at the caregiver credit here of 7,276. And I'd also like us to take a quick look at where that is in the Income Tax Act. That will be section 118, subsection 1, paragraph D, is where we see the Canada Caregiver Credit. For each year, a person who at any time in the year is dependent on the individual because of mental or physical infirmity, and either, so they could satisfy either of these criteria, is a spouse or common law partner of the individual, or, so you'll often see that, the word either paired with the word or, because it's either. So, or has attained the age of 18 years and is a dependent of the individual. It will then be the amount determined by the formula. It says 6,883, but I think you're getting the idea now. That is indexed to inflation. So that is not the current year number. The current year number you can find in the tax reference tables, minus E. And that would be the income of that dependent by how much their income exceeds a certain threshold. That threshold you'll find on the tax reference tables as well. So here it is again. There's the Canada Caregiver Credit of 7,276. And we see the net income threshold right beneath it, 17,085. The income threshold seems to be irrelevant for this question because it says near the bottom there, if you can see my cursor, it says she has no income during the current year and continues to live with Donald and Donna. So the following credits would be for Donald: the basic personal amount. We would have the spousal amount, so 13,229, subtract 6,340, that was the spouse's income, and the Canada Caregiver Credit. Add them up to get our base, multiply it by the appropriate percentage, and we get our total credits. I hope you found that debrief to be useful to you. Often the tax reference tables is a great place to go if you have to deal with tax credits under time pressure, but it's important to know that some of the credits that are mentioned in your lecture, they're completely examinable and they have little other features or other wrinkles. And this was just an example of a few of them, right? There are more, and again, I encourage you all to make sure you've studied your lecture and your readings because they are covered in more depth there. So until the next one, thanks for watching.